Stock market and SoFi investors, welcome back to the channel. My name is Jason. In today's episode, I want to break down 3 reasons why you should be buying the most recent dip of SoFi stock. We hit all-time highs over $30 per share. We're trading in the $25 range. The stock is down nearly 14%. I'm going to show you guys why I think it's a great opportunity to buy this dip. But the first thing I want to do is talk about today's video sponsor, and that is Moomoo. Let's get into it. To be a successful trader, we need to find information quick and easily, and I want to share with all my listeners out there about an incredible free trading app I've been using to help take my stock market trading to the next level, guys, and that is Moomoo. This investment app charges $0 on options trades, $0 on contract fees for equity options, free level 2 data and real-time option chain data, helps optimize your earning potential as a trader, and I truly love this about Moomoo, guys. This app is great. And if you're interested, Moomoo does offer lower margin requirements than most other brokerages. Also, guys, if you open up a new Moomoo brokerage today using my link in the description down below, you get some great benefits, including 8.1 APY on idle cash in your account. Moomoo is also offering free NVIDIA stock depending on your initial deposit. You deposit $100, you get $20 worth of NVIDIA. You deposit $10,000, you get $300. And then, man, if you put in $50K, you will receive $1,000 in free NVIDIA stock, guys. It is truly a life-changing app. All right, investors, while you're navigating the Moomoo app, there are a ton of beneficial tools that you can use to help optimize your trading. One of my favorites is the events calendar, guys. Fire up that Moomoo app and I will show you how to get there. We're going to go down to markets, right? And then we're going to scroll down a little bit to economic calendar, right? If you're an options trader, you need to know what is going on and when, right? So we're going to click on this little arrow right here. It's going to take you to the next screen. This is going to bring up a slew of different dates and events that you need to be in the know about if you want to optimize your earning potential, right? Everything from manufacturing data all the way down to GDP stuff, right? It's really, really important that you know when these dates are happening so you can make the most money. And to remind you, right, there's a little calendar with a plus sign. Click on that. That will add these dates to your calendar, guys, so you are always in the know. If you want more information about Moomoo and the app, click on the link in the description down below. Now, back to the video where I'm going to talk to you guys about 3 reasons why you should be buying SoFi stock after this recent dip, guys. Woo, baby. We could see all-time highs, 52-week highs, also $30.30. And then, you know, from this chart down to where we're at right now, yeah, we're down closing in on 14% at 25.84. I did add a little bit of SoFi today. I bought 150 more shares in that $25 range, guys. But, you know, the stock has been performing unbelievably, 82% year to date, up 228% over the last year, right? And this, if we take a look at this chart, is one of the most vicious downturns percentage-wise we've seen over the last year. And to me, that is a buying opportunity for SoFi stock, and even selling some cash secured puts in that $24, $23 range definitely makes some sense to me as we move forward. Number 1 on my list on why you should be buying SoFi stock for the long term and take advantage of this recent dip is the demand for home loans, guys. First, we're going to start off with home and refinance loans. Mortgage volume, in my opinion, is set to explode as we continue to see the rates come down slowly over time. And that's also going to give us opportunity in the refinance market, right? There's a lot of home equity built up in homes, right? So over the last 5 years and this recent environment with lending volume kind of plummeting and interest rates skyrocketing, homeowners in the United States have built up an all-time high of $35 trillion in home equity in their homes, guys. It's really incredible. That number is crazy, crazy high. And then when you refinance your house, you take out a home equity loan, what you can do is get pretty good rates and get those things you want done for your home. You want a new pool, you want an addition, you want to put a new roof on, new floors, new carpets, whatever it may be. But no one wants to take out those kind of loans and refi their house and take out a home equity loan at 7%. No one wants to do that. So as these rates get lower and lower over time, especially over the next year, when we're under 6%, that's going to be a huge opportunity for SoFi to take advantage of the new markets, right? Because inflation hit us so hard in 2022, all these refis really dried up. So I'm expecting over the next 3 to 5 years, we're really going to see an increase in refinances. If we take a look at this chart, some of these experts and organizations predict the refinance market. This was their forecast for 2025, and they made notes on 2026 coming up, right? Mortgage Bankers Association expects rates to potentially drop to 6.3% or lower in 2026, boosting activity. Projects increasing mortgage origination volume in both 2025 and 26. That's by Fannie Mae. And the National Association of Home Builders predicts rates will fall below 6% in 2026, potentially triggering a significant market increase, right? Now, here are some key predictions for 2026 in regard to interest rates. Fannie Mae predicts rates will end 2025 at 6.4% and then fall to 5.9% in 2026. The NAR, the National Association of Realtors, expects average rates to be around 6% next year. That seems to be the consensus. National Association of Home Builders forecast rates to stay in the mid 6% range and dip below 6% by the end of 2026. Mortgage Bankers Association forecast rates to hit 6.5% by the end of this year and decline to 6.4% in the final quarter of 2026. MBA is a little bit more conservative than some of the other organizations, right? And next, on this list, personal and student loans, I think they're going to be a huge beneficiary, SoFi is, of both of these different types of loans. The student loan limitations contained in the recent tax bill and spending bill is really going to push student loans to companies like SoFi, in my opinion. Overall demand for personal loans in 2026 is projected to increase, driven by consumer borrowing for debt consolidation, home improvements, and education. Forecasts suggest a market size of up to $674 billion by 2033, growing at a compound annual growth rate of 10% from 2026. That's a huge number, and SoFi is going to be a beneficiary of that for sure. Here are some key trends driving demand in 2026. Obviously, the decreasing interest rates, right? And I expect as inflation curtails, we're going to start to see more and more aggressive rate cuts in that, 0.25% to 0.5% range. I don't think we're going to see like 0.75% or 1%. I don't think that's going to happen. It's going to be between 0.25% and 0.5% as we move forward in 2026. Lower rates are likely to be attractive to consumers looking to consolidate high interest credit card debt. Credit card interest rates are crazy, between 20, 30, 40%. It's astronomical. Don't use credit cards if you don't have to, man. It's really terrible. Growing fintech adoption, right? Companies like SoFi are becoming more and more household names across the country. Fintech companies are making the lending process faster and easier with digital paperless applications. Lending Club, one of the competitors for SoFi's market analysis, shows online loan inquiries rose significantly in early 2025, and a trend they expect to continue into 2026, and I agree with that 100%. Fintechs are also expanding credit access to underbanked communities through new credit scoring models, right? Potentially leading to some more risk, but if they get this algorithm right, they could help out people that actually really need these loans. Because right now it is pretty tough to get a loan with SoFi. And then increased borrowing across all credit tiers. Personal loan growth has been observed among both super prime and subprime borrowers. TransUnion reports that unsecured personal loans grew by 18% year over year in the first quarter of 2025, a trend that is continuing into 2026. This indicates continued borrowing even amidst economic uncertainty, though different consumer segments are borrowing for different reasons, right? And the more people that are borrowing for different reasons, not just another of many reasons why I love SoFi. Moving forward, that's my first. Now we move on to number two. That's a risk on environment, right? So rate cuts. Cheap money finds its way into the markets directly and indirectly, right? We have seen some things going on with the economy that could force Jerome Powell to cut rates even, more quickly than initially thought out, right? We take a look at this chart. This is the overall unemployment since June of 2023. We were at 3.5%, right? And then we rose up sharply in 2024, and then we kind of came down a little bit, but we increased to 4.2%, dropped to 4.1%, and the latest reports are in August at 4.3%. So we ticked back up to the highest it's been in quite some time, right? If we get over 4.5% and close in on 5%, Jerome Powell is going to have to cut rates even more quickly, right? Because if they give companies access to capital, then they're going to be able to cheap capital, right? Cheap loans means they could hire more people and kind of expand their businesses, right? So that's kind of where I'm at in regards to unemployment, right? Typically, businesses hire more employees when they have access to cheaper capital and cash, right? And this also has a lot to do with the GDP, right? So right now, GDP growth rate is around 2.2% expected for 2026. That's not awesome, right? Especially if inflation is outpacing GDP, we never want to see that, right? We want to see GDP up around 3% in my opinion, right? So if inflation stabilizes or continues to tick up incrementally, we're going to see Jerome Powell potentially, want to raise interest rates if inflation continues to rise, right? But if it stabilizes, this is an environment where he can continue to decrease interest rates, right? So inflation happens, especially when interest rates are really low. There's a lot of cheap money floating around. That's going to push prices up, right? But with the stabilization of inflation from the data we have seen, this is going to be a great environment to lower interest rates, right? So I'm really excited about that. I'm a little nervous about this whole unemployment situation, right? But as unemployment ticks up, we got to give businesses access to cheaper capital so they can invest in their business and grow their employee base. Right now, I'm having a lot of friends having a lot of trouble finding work, man, going on, sending out hundreds of resumes, only getting a few callbacks for interviews, and then these interviews really go nowhere, right? So with the current tariff environment, businesses are constrained with their spending, and when that happens, hiring stops. It's not a great environment for unemployment, right? So I expect this to tick up and close in on 5% by the middle of next year. But hopefully that does not happen. I would love to be wrong about that situation because 5% is the kind of number where the economy could be in trouble, right? So we have to take that into consideration, right? That's why number two, the risk on environment, right? And that is only going to continue to happen if we continue to see this environment with stable inflation and unemployment kind of stabilize in that 4.5% range or lower. I want to see it tick under 4%. That would be great for the overall economy, help out GDP, and we can move forward with this risk on environment, right? So a risk on environment is great for SoFi, in my opinion, right? Because a lot of SoFi's revenue is moving to fee-based revenue, whether that's through brokerages or with their loans, their loan platform. What they're able to do now is kind of sell these loans off and put the risk on other people and collect fees, right? And that's a great way to grow this business, right? I think a risk on environment will benefit SoFi in the long term. Cheap money is good money for business, in my opinion. So I like that overall environment for SoFi to be really, really successful, guys. And the next thing and final thing I want to talk about is the crypto environment, right? SoFi CEO says fintech bank is bringing back crypto investing, right? And that is a huge deal. the amount of fees that Robinhood has collected over the last couple of years with their crypto business has been astronomical. And we've seen what's happened to the Robinhood stock price over the last couple of years. It's been up dramatically, right? So this is a really good thing. When they got their bank regulations, they had to get out of crypto, but now notice goes, we're going to re-enter the crypto business, which we had to exit. Noto said, we'll re-enter the business, allowing our investors to invest in cryptocurrency, right? That is a huge deal moving forward, right? Again, this came out on their investor relations page. Here we go, with the future of financial services, SoFi to offer members new crypto-enabled capabilities to get their money right. This is a great thing for SoFi moving forward, right? They want their members to be able to invest in a selection of cryptocurrencies, including Bitcoin and Ethereum, right? And they're also starting to invest in different types of companies and partner with them. SoFi partners with Lightspark to power blockchain-enabled international money transfers, right? When you do it on the blockchain with, say, like Bitcoin, right, it's a lot cheaper and more efficient to move money, and you can get it instantaneously, because there was a period where a lot of these international transfers would take days, if not weeks, to clear. Anthony Noto and SoFi want their customers to be able to get their international transfers really quick and take fees based on that. And most recently, guys, with the whole crypto environment, Morgan Stanley and SoFi joined a $104 million zero hash funding round that creates new $1 billion crypto infrastructure unicorn in 2025. It's great stuff, guys. Morgan Stanley and SoFi have invested into this company, Zero Hash, which, the funds are managed by Apollo Global Management, right? This is really, really good stuff. Zero Hash founder and CEO Edward Woodford captured the change taking place in financial services, right? We are building the Amazon Web Service of on-chain infrastructure, right? This raise and the caliber of our investors and clients, including SoFi, is a testament to the trust we've built, right? So they're investing in a growing cryptocurrency platform, right? They're going to offer cryptocurrency on their platform as well. So this is a great thing moving forward, guys. Thank you so much for tuning into this video. I gave you guys 3 reasons why you should be buying this SoFi dip down, closing in on 15%, guys. I took advantage of it today, and I think there is opportunity for investors to take advantage of this opportunity, guys. Don't forget to like and subscribe. Thank you so much for tuning into the video. And if you want to check out Moomoo, the app and the online interface, check out the link in the description down below. Peace.